Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, March 18th, 5:09 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Day of the market, we're in an uptrend. If you check the trend gauge here in the upper right of the screen, you can see we've got the coveted 4 green arrows, but a couple of warnings, that being several leading stocks breaking the 21-day moving average. The question is, will they find support at the 50-day or 10-week? We're watching closely. We're also, of course, watching those that are holding up better to see if their relative strength that they've maintained during this pullback will follow through if the market regains some strength. We've really been going sideways for about 3 weeks here, with a bias toward weakening on the tech sector, which typically leads rallies higher. So something we're very clearly watching closely. So as far as the 3 time frames that we track, small caps now with 3 closes below the 21-day moving average. Dow closed basically right on the 21, and the NASDAQ 100 gapped above the 21 but faded as the day went along, still closed slightly above it. So we are noting the divergences there. All 5 of the indexes, major indexes, stay in a green state above their medium-term 50-day moving average and long-term 200-day moving average. So what happened today? Gapped up right at the open, mostly led by, triggered by the Big-7 and some news over the weekend that Apple was looking at partnering with Google's Gemini AI product to power Apple phones. Now, they seem like strange bedfellows, Apple and Google, and it may signal that Apple might be further behind on AI than they might have let on to be if they're wanting to partner with Google, whose product has already had very well publicized issues. So that gap up, always wary gap up on news, especially when it's tied to a few companies like that. But we stayed green, but did fade significantly from the highs, and mid caps and small caps finished red. Here are the final numbers. The Big-7, led by Google, which was up 6.25%, up on average 1.56%. The RG8 just barely positive. This is a bit of a yellow flag. We want to see the RG8 outperforming. That's the main pond that we fish in for larger small cap and mid cap growth leaders. S&P 500, led by the Big-7, up 0.63%, equal weighted, up about half of that. NASDAQ 100, as I said, faded, was up over 1% most of the day, just below 1% by the close, equal weighted, up 0.67. Dow up 0.2, mid caps down 0.2, Russell 2000 small caps down 0.7, Global 60/40 up 0.21, in-house GROTECTION up 1/3%. Let's get into the charts. We'll start with the S&P 500. And really what we're looking at here, I talked about 2 scenarios. Are we going to end up more like last July, where we had this big negative reversal, a couple of inside days, and then faded to the bottom? That being the negative reversal from 2 Fridays ago, but we since challenged those highs, then had the 3 days of a pullback. So that was looking weak. We broke below the 8 there, broke below the 8 on Friday, but the gap up back above the 8-day despite closing at the lows of the day. And you can see this pennant that I drew here. That's really the consolidation that we're looking at to resolve, and it'll probably resolve one way or the other with the Fed meeting on Wednesday. There's been some data that came out recently that the employment picture is weakening substantially. That would be good news for the Fed if they're looking for weakness or anything that's going to tamp down inflation to cut rates. But the inflation data itself, the last CPI and PPI reports that came out last week showed inflation. And so a mixed bag there. We'll see what Jerome Powell says, and more importantly, what he says in his Q&A presser Wednesday at 2 o'clock Eastern time. So basically, we've been in about a 16-day consolidation since this gap up back here, that last inflection point that I had on February 22nd, which coincided with, I want to make sure I don't give out the wrong information. Yep, that was NVIDIA's last earnings report that fueled a big AI tech gap up, but really just consolidating since that process. And the NASDAQ 100, we broke below the low. I pointed this out in Friday's video, back above it. So again, this is a consolidation that we're in here. You can see the declining tops trend line, slightly less bullish than the S&P, but that's okay. That just means that sector rotation is taking place, and there's more than just tech that's acting well in this market. Back to the Dow. Closed below the 21 on Friday, basically right on it today, continuing to see some relative weakness, although kind of in line relative strength over the last week and a half. Mid cap, this is looking like a failed breakout at this point, below the 8, and the 8 has rolled over. And after the first close below the 8, each subsequent 2 days have had their advances capped by the declining 8-day moving average. That's somewhat bearish. You want to see it get right back above there. Or if we bounce off the 21, could we pull back that far, get back above there quickly to reinforce the short-term strength? Waste management is not small caps. There's IWM, and you can see, again, the last 2 days, first close below the 21, tried to get back above it on Friday, couldn't, got back above it today, couldn't hold it. So this is very similar, and you can see how the 8-day has rolled over there, and we're unable to not only get back above the 8, but not above the 21. And you can see the relative weakness there. That's not good for the overall market. So that's the 5 major indexes. Let's go to the VIX. VIX down slightly with the market up, not a surprise there. The dollar higher for the third straight day. How did this impact gold and silver stocks? Tight range for gold here, just barely positive on the day. GDX gold stocks down 0.5%. Silver down 0.5%. Bitcoin faded over the weekend and continued lower during today's session, down 3.4%, breaking below the 8-day moving average, and the 8-day has rolled over as well. The 21, the next target, lower. Now let's flip to bonds. Not a whole lot going on in Bondville today. You can see a tight range, third straight, actually sixth straight lower close on the broad bond index BND, which means 6 straight days of on average bond yields higher. TLT 1, 2, 3, 4, 5, 6, 7, 8 lower closes on the 30-year. That means we should see 8 higher closes. Well, remember this closes an hour earlier. The TYX quote, the bond pits close an hour earlier than the stock market does, but the TLT down for 8 straight days. We're showing 7 out of 8 days up here. That's the yield on the long bond, not good for the overall market. The 10-year TNX, you can see 6 days higher there also, and now hitting the top of the most recent trading range. So see if we break through that level. And again, what happens Wednesday with FOMC might have quite a bit to say about that. All right, let's get to the tail of the tape. Basically, we've been in a 16 to 18-day consolidation, depending on how you want to look at it. First day on the S&P back above the 8-day exponential moving average, 48 days above the 21-day moving average. As far as sector goes, there was some sector strength today. 9 out of 11 of the spider sectors finished higher. The only 2 were just barely negative, that being medical and real estate. Semiconductors were a mixed bag today, as NVIDIA was all over the place as they're hosting a big AI GPU tech conference today. On the downside, regional banks, gold stocks, biotech, retail, and home builders. Just one change to the portfolio added to SSO with the recapture of the 8-day exponential moving average and the 5150 level, which we basically closed right on by the end of the day today, picking up our exposure from 0.99 to 1.09. Bottom line on the day, Big-7 fuel a gap up and a green close, but well off the highs, and mid and small caps lagged. Let's take a look at some individual names. We'll start off with NVIDIA, as this gapped up big at the open. You can see it's down 1.5% after the close, but you can see the 5-minute chart on this. This peaked pretty early in the day and then just sold off before a bounce late in the day. And SMCI acted in a very similar manner. Not as big a gap up. First undercut and reclaim of the 21-day moving average since this big breakout here back in mid-January. Down 4% after hours, though, so that's going to be below the lows of today. Let me double check that. 952 was the low of the day, so still slightly above that level. So interesting to see that selling off as Jensen Huang, the CEO of NVIDIA, is giving the keynote address right here as we speak. AMD taking a bit of a hit too after hours, down 2.5%. Just could be a sell the news situation with semiconductor stocks. As far as the standout in the portfolio today was Nutanix. We haven't added to this as haven't had a lot of confidence in the way tech leaders have been acting over the last couple of weeks, for the most part just going sideways. Up 2.6% on average volume, reclaiming the 8-day moving average. Some weakness in the portfolio today early in Uber, down almost 3% at one point, but regained a lot of that, still below the 21-day moving average. CrowdStrike back above the 21-day moving average today, and Eli Lilly up over 1%, putting a little bit of distance between itself and the 21-day moving average. I already talked about gold and IBIT. GPS, this is the gap. Looks like it wants to take the place of Abercrombie and Fitch and just go on a big run. Look at the massive volume since this earnings report, breaking out of a base and just continuing to power higher. A couple of other standout stocks today. ANET, back near highs after bouncing off the 50-day moving average last week. Cart, this is Instacart. Actually, it's called Maple Bear, which is a weird name, but you can see how this has been on a very nice run since its earnings report. App continues to stand out, making higher highs since its earnings gap higher. And Oracle last week with its earnings report, entering the group of AI companies that are very much profiting from AI. More new news comes out every earnings report about companies that are taking advantage of this AI wave that's going on, and add Oracle to that list after its earnings gap up last week. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com, or you can leave a comment on our YouTube page. Please like and subscribe and tell your friends about us. We'd appreciate that. The phone is 855 Real Wealth. That's 855-732-5932 if you're interested in becoming a client. Call that number, or you can email my partner, Dan Stewart, dan@revereasset.com. Your flagship portfolio is named GROTECTION. It serves a dual purpose, that being to grow assets during market uptrends and protect them during market downtrends. Got out of the way of COVID, dodged most of the bear market in 2022. We just follow the trend. It's that simple. When things weaken, we lighten up. When they're strong, we ride the wave. That's going to wrap it for Monday, March 18th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.